Now, I have enough videos on Sofi and I'm sure you can tell that I like the company where I feel comfortable holding it for a long time, and especially during their growth phase. But after what happened with Affirm, there are some questions about Sofi. I will have a detailed video on Sofi fourth quarter earning next week, but today I would like to talk about Sofi Bank. Now, I was reading an article on Wall Street Journal and the article was very interesting at many levels. So without wasting any time, let me share the article and then we'll talk about the kind of effect this will have on Sofi. And as a gentle reminder, please click on the like button, consider subscribing, and for one-on-one conversation, consider joining our Discord and Patreon. Links are in the description below. So we are talking about two articles. First, I would like to discuss this one, which says deposit rates unlikely to increase. And then after that, we'll talk about student loan that also was mentioned in the same newspaper. So pay attention to this. Before I read the article, take a look at this and this is gonna actually blow your mind. So in 2017, this is 2017 right here, the total commercial deposits on a weekly basis right here, 11.54 trillion. That was January 4th, 2017. Fast forward to 2022, which was January 26, 2022, right here, $18.10 trillion. That's total deposit at US commercial banks weekly. This is insane numbers. This means that people are depositing money in the bank. Two things, this actually clears two things. Number one, we have a lot of money on the sidelines. People are not investing money in the stock market because of course they don't know where to invest the money, but especially the CPI data that came out even confused the banks or the people more. But pay attention to what's going on here. So in the beginning of 2020, right here, we see these 1.5 interest rate, and this is actually 1.5 across the board. So in the beginning of 2020, all these banks were offering 1.5 interest rate to around 2% interest rate. It's Capital One, Ally, American Express, and Marcus. I actually have an account with Marcus, and I opened the account because they were offering like 2.0 or something back in 2019, which was really exciting to see a bank offering that kind of an interest rate. But then what happened? Fast forward to 2022, the interest rate just plummeted. Right now, 0.04 or 0.5. 0.5 is actually pretty good given what's going on in the market. The interest rates are really, really bad. So they're talking about that now Fed is increasing the interest rates starting March. I think the first hike we are going to get in March, 0.25% or 0.5%. We don't know yet. That's the confusion we have in the market. So usually when Fed increases the interest rate, people get more interest rate from their banks. So they're saying that, okay, Fed has increased the interest rate. That means banks can now go to their consumers and customers and offer them a higher interest rate on their savings account. This article is talking about that they won't do it this time. Take a look here. The Federal Reserve has signaled it will raise interest rate in March. The first is what is expected to be a series of interest increases this year. Higher rates usually mean bank customers stand to make more money on their deposits. Not so this time. Banks have little incentive to raise the interest rate they pay on deposits because they simply don't need the money. There's so much money. Look, $18.10 trillion versus $11.54 trillion in the bank on a weekly basis people are depositing. And then they're talking about government stimulus up Americans' bank account balances and companies are flush with cash. Total deposits at US commercial banks have swelled to about 18.1 trillion from 13.3 trillion at the start of 2020. So this is 11.54, then 13.3 in 2020, and now 18.1. And these are commercial banks, by the way. Banks which pocket the difference between what they charge borrowers and what they pay depositors are expected to use the opportunity to breathe life into their bread and butter lending business. Profit margins from the lending fell in new lows across the banking industry after the Fed cut rates to near zero in the March of 2020. And we know that Sofi's biggest book of business, which was student loan, was also stopped. So that's a huge hit for companies like Sofi. Then take a look here. The average rate on a savings account at the largest US bank stood at roughly 0.06% at the end of last year, according to bankrate.com. Many high-yield saving accounts, which offered 1.5% or more, rates headed towards zero in the early 2020 and now offers a rate of 0.5%. This is so true. I saw the decline and then they went back and kind of gave more 0.5%, which is of course now seems like a joke because you can make a lot more, or you used to can make a lot more in the stock market during 2020. But the things have changed now. Even 0.5% or the iBond video that I did, I'm going to link it towards the end of this video. Watch that video. That's 7% return on your money. yearly basis, that too very safe and secure. That sounds like a deal right now. Okay, then I would like to pay attention to, or I would like to bring your attention to these 2 points here. So the overall rate paid will be lower in the next rising cycle. That's from Ally Financial. Okay, this is important and I'm going to come back to this point. Then take a look here. Banks reported higher loan demand in the last 3 months of 2021 and may expect the trend to continue in 2022. This is a conflicting statement. I am not sure if they're talking about higher commercial loan demand or they're talking about higher personal loan demand. Because from the PayPal's earning that came out, it looks like that people are not borrowing that much money. But they're talking about that the loan demand actually went up in the last 3 months of 2021, and they're saying it could continue in 2022. So what we are seeing here is that traditional banks may not offer higher interest rate, but banks like Sofi, which just got the banking license, they're already offering 1%. So if Sofi can maintain 1% or even go up to 1.5%, depending on what kind of interest rate hike we see, some of them are saying we are going to see 5, some of them saying we are going to see 7, and 0.25%, we are reaching 1.50 very soon. So they're talking about that if commercial bank or traditional bank doesn't offer, then banks like Sofi has a huge opportunity to attract more and more consumers by offering a little bit more than the other bank. The whole reason that I opened my account with Marcus instead of I banked with Bank of America, but I went with Marcus for the savings, is because they were offering 2% interest rate. So people like me who are looking to kind of put money, just on the side on the savings account, would absolutely cherish the Sofi. And I'm going to put my money in Sofi now because that'll give me a chance to kind of see the app firsthand and also a better interest rate. Why not? So now we are talking about the second part of the article, or the second article in the same newspaper. Student loan aid plan can make debt worse. This was the first article that I have seen recently that have talked about student loan debt or student loan forbearance as a negative, which is a great thing to do, because student loan or forgiveness or whatever you want to call it is not a good thing. And they are talking about the same thing here. Student loan aid plan can make debt worse. So what they're saying is that when the student loan is given, actually, let me just read first line so we can make it clear. Thousands of healthcare workers join the National Health Service Corps each year, pledging to work in places with too few medical providers in exchange for help repaying their student loans. Okay, this is talking about one simple category, but it's going to trickle down. Job disruptions caused by the pandemic have shaken that bargain. Layoffs have put a growing number of those workers in violation of their contracts and exposed them to heavy penalties. If you read this article, they're talking about that this person had a student loan of about $25,000. They got the job, the student loan was forgiven. But when they got laid off, that $25,000 now turned into like $55,000. It was crazy the amount of money accumulated because they lost their job, they lost the contract. So now they have to pay more for the same student loan. So this kind of article makes me believe that maybe Biden government will come out and will actually act on ending the student loan forgiveness on May 31st as they plan, because that's going to be instrumental for Sofi for 2022 to make sure that they have solid books, to make sure that their guidance is very strong for 2022. We need the student loan forgiveness to end by May 31st. It was supposed to end in January, it didn't happen, they extended till May. And now I'm seeing some news that they may extend it more, or they may even say that we are going to give relief and forgive it. When they say we are going to give relief, they are not going to pay the interest rates to these companies. What they're going to do is they will have some kind of a plan for these companies, because again, they're not going to put these companies out of business, but the amount of money that they can make directly from the consumers is a lot higher than what they can make if the government pays them back. So I feel this news kind of a good sign that student loan aid might end on May 31st, because they see that a lot of people are in that same situation where they owe more now as before, and it's better to kind of end it so people are more responsible and they pay what they borrowed. It's simple. I mean, you help people responsible and they will make the payment. Who wouldn't want to take a free lunch, right? I mean, everybody would raise their hand. Even if they can afford to pay, they would say, you know what, I can't pay, I need the forgiveness, and government has to give it if they're doing it across the board. So these are some very interesting articles that I read. This one especially because this one will help companies like Sofi to get ahead of their competition, to get ahead of other banks, those who are offering these interest rates, because SoFi is a young bank and their 2022 EBITDA is so much dependent on the deposits that they're going to get from the people, or the people coming in, or the new members coming in and depositing money because now they're a bank. So this is huge. I really like this particular article. I actually read the whole thing, and if you read the whole thing, you will see some very good points mentioned in the article. So again, if you think that this is a stock you're going to get rich within next month, then you need to buy some puts on the market. I'm just kidding, but maybe not. You know, with what's going on today in the market, it's crazy. But this is, of course, not the stock that is going to 10x return or give you 10x return in the next 5 months. SoFi will benefit in many ways by becoming a bank, and I feel they will have great numbers for Q4. Now, the guidance should be strong as well because of the banking license, but this is yet to be seen. I'm kind of iffy by seeing what's happening with Affirm. And of course, as I mentioned in my video, that Affirm, there was one number which was really confusing. If you haven't seen that video, I'm going to link that video, so make sure you go watch that video, because that their sales and marketing, it just didn't make sense. So that's something yet to be seen. And of course, the guidance for all these companies, all these fintechs especially, coming ahead of their 2022 guidance is a key. Also, here is a kind of a nugget here. So this morning on CNBC, they talked about the biggest buys by the CEOs. And PayPal CEO bought, or PayPal CEO and CFO combined bought about $2.59 million worth of stocks in PayPal. Buyback, basically insider buying. Not buyback, but insider buying. PayPal CEO sold it in December and came out a month and a half later and bought it back. So I think this is a good sign, in my opinion. 2.59 million, of course, they won't do it. So this is something to keep an eye, especially for PayPal. PayPal has been really trading, in my opinion, at a very healthy range and very good range. PayPal is a great company. But again, these days, every company looks like it's at a discount, and we don't know what's going to happen. Maybe next day it's even going down further. So I'll be back with more insights on SoFi numbers and also our realistic expectation with the earnings in the coming weeks. We have few other fintechs reporting, and that'll help us get the good insight on SoFi earning. As always, a pleasure to share all of this with you. Until next time, you all have a sparkling day.